Good afternoon, Scott Redler, T3 Live. Welcome to Mondays. What's today? Wow, it's only Monday. Monday's recap. So, today we opened up, a little bit, and after Friday's, sell off in the last hour, I think some people were wondering what could they do. Could they, sell the up open, which typically makes sense if you close that week on volume. Typically the next morning you come in, and if you see the futures counter trend to that close, you sell some. I'm sure a lot of people went out short, so they came into like, I didn't get the easy trade down, 8 to 10 handles, so let me add to the potential up open and see if we could, take out Friday's lows and then figure out if, we're too micro oversold to continue downward, or to maybe figure out if, people are a little worried about, the Tuesday phenomenon where we're up 20 out of 20 Tuesdays, and then, basically the market resumed or regrouped and we closed near the highs. So, if you look at the range here, it's very interesting. Okay, first of all, we've talked about these pivots many times. This has been first of all, the macro trend since the red dog reversal in November. Here is your gradual trend that was only tested once, right here. There's your 50-day moving average. Last few times we've corrected, we've had a minor wedge type pattern. This one coming in, small red dog reversal, ended it. Then we had a quick follow through to the upside, held in there, and then resumed. Here we had that breakout failure that wound up getting engulfed, okay, and then we stayed below it and continued, and then we held the 50-day. So from there, obviously just a quick little recap here too. That's when we held higher. Here's your outside day from last Wednesday. From here, we put a high in at 1687, wound up getting a 3.3 or so % move down to the 21-day, and then we put in this range, and then you look very closely to what transpired today. You had a bit of follow through first because we opened up, and then we went through yesterday's low of 1630, and we put a new low in at 1622. So from right now, this is what we know. Here's your outside day at 1687, and here is a small red dog reversal, okay, into this 1622. Oh, it's still above the 50-day. And who knows what really is going to happen here, except for if you sold some longs into this, red dog into this outside day red dog reversal. Today you maybe had the luxury of buying some things back, or at least covering some things if you were short, to then see if we rally back up to retest the 1645 or maybe even the 1653. So with that said, those who follow me on the virtual trade floor saw that I came in, I have a put spread on, which I'm going to stay with just in case we do continue lower. Some people saw me put on some longs, and I went from short the spiders, okay, which I had on overnight, and I traded around them, and then I went to long them at 163, 40 or 50-ish. People are like, Red Dog, why are you going long the spiders now? Aren't you a little bearish? I'm like, well, at this point, I have a feeling they're going to squeeze into the close because nobody's going to want to be short, so I can make a little bit of money, with that pattern. Plus, we were trending higher. And then on the close, or near the close, I'll get out of my spiders long, flip back short to then ensure some of my other longs that I put on, because I do have, I think, 4 or 5 longs, which I'll get into. So if you go to the pattern of the spiders on a more micro basis, just to show you where that was, here's your, your 3-minute chart. Let's do it with the spiders. So here's your 3-minute chart, okay, and right around here, okay, when we're at this level, I was like, you know what, it looks like they're going to try and do a bit of a squeeze. So I got away from what I had on the spider side short. I went a little long, traded around it, and then right around 164, so I took it off, and then right on the close, I shorted some. It still looks like it's trading around here, but so that was my little maneuvering to save me what? It's not a lot, but to save me 60 cents, from this move and making some, so it's a little bit more than 60 cents, and then, putting it back on here to continue to trade. And now tomorrow, we'll see, what the phenomenon is here. Here is the spiders. I just went over the SPX. Here is, that wedge that, that resolved to the downside. Yes, I think we could see a little bit more of a push back into this, but, the funny thing is, I think I tweeted somewhere around 340. I'm like, what would be the most frustrating situation for some traders? Would be, a strong close, right? Because some people would be scared to take home things short into the Tuesday phenomenon, and then tomorrow we gap down and we just continue to trade lower, and then we go on our way to test this trend, which comes in closer to the 50-day, which is right around here. So anyway, there were some trades, and we've talked recently about some of the more defensive names that got really hit harder. So today, some guys saw me get along a little J&J and a little Kimberly Clark, and people are like, why? I'm like, you know what? If they are rotating, okay, and the market seems like it's rotating, here is your outside day in J&J. That was your signal to get out, maybe get short, okay. Then you had your gap lower, your lower high, continued down, and then right into this moving average. What is this? Nice little red dog reversal. So it traded below 84.18, back above it. So I got long a little bit, saying, you know what, maybe it tries to retest this area. So that is a tactic, and who knows? Maybe this is a swing bottom for this thing. I don't know, but at this point, it could be a day-and-a-half tactical trade, or it could be a little bit more than that. You saw the same thing in like Procter & Gamble, okay, where some of these names that the spiders hide in, it had this was your, this was the gap, or this was your potent down move into the gap that got some guys out of it, and then boom, boom, boom. Here was your, I'm not in this one. I was just looking, we posted this as an example. Here it traded through the low, back above it. So maybe this tries to rally. I did go with Kimberly Clark, KMB. I think that's the symbols. That shows you. This one, had a bigger travel range. Didn't exactly turn green, but I think, from where this broke out from here, it was worthy of a trade. Especially if you got stopped out when it broke this trend right around here. This was one trend, and then actually another one was when it went through the recent support there. Now this has some room. So for a tactical trade, maybe that happens. If not, this will probably be my stop, or maybe a little sooner. So I'm long a little bit of that. Didn't act as good as some of the others, but not so bad. So with that said, there's others, I guess there's other stocks in that group that might have been worth a look. But more on the bank side, the banks, we talked about the upper range, saying, okay, they've only, pulled into the 8-day. If they get a little weaker, that maybe gives us some signs that we're going to pull off further. Let's check the 21-day. And then, see how they handle there. And most of the banks held the 21-day. And when I saw Goldman go green again, gave me a little bit of some clues to, again, maybe get along the spiders for that Q trade. So you look here first at the XLF, and you'll see, this was that upper range. So it broke through the midpoint of this, okay, right around here. But what did it do? It held the 21-day moving average for now. So, nice short if you took the short real quickly, and then turned into a better long. So now who knows how much time this is going to need to go sideways, but it could be a little bit more time. Goldman, luckily I can't say this was skill, but I got short Goldman today when it went below yesterday's low. I'll get to that in a second, and then covered it when it went below here. Got a little shorted, and then it went through the 8-day, came back above, and I'm like, yeah, you know what? I'll just cover it, take some of the trade off, and now this still looks pretty good. Protected this gap, not even at the 21-day. This is showing a lot of relative strength. And then one of the banks that I've decided to stay with for most of the year that I'm trading around, it also, we were talking on the VTF, when it hit the 21-day, some guys are like, what are you doing, Red Dog? I'm like, you know what? I came in long it, but very light, and then into this I went back to somewhat of a tier 1, and then and then I sold a little bit on the close, and now I have more long than I had overnight, but that's why I'm trading this range. This is kind of similar to, not as strong as this one when it reversed here, but overall, you could tactically maneuver it if you're trying to be in it for more than a trade. Which goes to talk about, I've talked about Intel and Microsoft so many times this year, and granted, unfortunately, I've traded them pretty poorly. And Intel was upgraded by Barron's, whatever. Friday, remember we talked about them winning the Samsung deal, and that how they were always considered glass half empty because they weren't in handheld. But I guess Barron said it's different now. So Intel wound up continuing. Look at this big gap up. I think I talked about this pattern here, maybe Thursday or Friday in the morning call, not exactly sure. And then boom. I know this little move, I felt like an investor. I was long Intel on Friday. I had some stops in. I got stopped out when it came back below, and then boom, gapped up. But for those of you who threw it in the drawer, because I did say at some point this year, I wouldn't be so surprised if this thing could see 27 or 29. And I still think that's the case. It's just, you just trading your time frame. You're better off putting it in the drawer and forgetting about it. But I think that it does have that. And if you look at Microsoft, another nice pattern here. Okay, we all remember when Goldman put in the downgrade, after these 2 nice days, who knows why, then you had the gap up after earnings, and since then, it's been hugging the 8-day, and here you are breaking out again while the market's not even back on track. So this is a strong stock. I talked about the weekly channel here, or just say I'll show you on the monthly, and it still looks like, look at this channel. It's done absolutely nothing, Microsoft, for a decade. Remember when I started talking about Home Depot after the long channel, and Walmart and Boeing? Well, here people don't understand why it's going, but at this point you don't really have to. Maybe it's a dividend, maybe it's liquidity, maybe it's the Windows version, who knows? But it broke above this descending channel, and now this was my target for the year. Who knows? Maybe it could even continue higher than that. It still acts very well. Apple, it's a little wishy-washy. I know I came in long the call spread and the stock, and when it went negative, I got out of the stock, but later in the day, I got back in some of it just because it went positive, still hanging in there. This pattern is still building, your left shoulder, your head, your right shoulder. This little ascending channel still in check here. So at this point, I guess now we have a new point of reference. It held where it had to, 442. And closed strong for the first time in a while, where usually it sells off in the last minute of the day. So worthy of a little take home. And now we'll see if it could, at some point, get some momentum. I'm still in the call spread, and we'll see what happens there. I talked also about Japan this morning, about the pull-off we've seen in the EWJ. And a lot of people are like, oh, how do you trade something like this? I'm like, well, if you look at this trend, it's been in a really nice trend. This was your macro trend. You talk about accelerated trends. Here was your accelerated trend, and look at this reversal. Okay, this was a very blaring reversal that took place on this right around the same day that we had ours on that. What is that? May 22nd. Boom. So that was your first sign to get out, maybe get short. And now, this morning I said, what? I think in my swing account, I'll take the chance that, or I think from about 1060 or 1070, somewhere into this gap, I feel like I could buy a tier 1 and all the way down into bigger support of the 200-day if I have to, for some type of buy the dip trade in Japan and a reverse off the lows, and we'll see if tomorrow fills this gap or it does something different. Some people, I texted me, or not even texted me, I'm sorry, tweeted at me saying, what about Toyota? I said, you know what, if you want more beta, that makes sense, right? Here was your outside day here in Toyota. Here is the 50-day moving average, which it bounced off really nicely. So if you took that trade, perhaps it fills this gap tomorrow or it trades up to here. But that's how your exit and entries could all matter. So in summation, at this point, we had our outside day almost 2 weeks ago. You had your wedge being built. You had your Friday sell-off. You had your opportunity to trade around it on the up open this morning. Some things acted better than others. At this point, you still have to be somewhat neutral. Today you had a micro reversal, but I think it is because everyone's scared about the Tuesday. My gut still tells me that we need to see, maybe 161 before we see new highs, but who knows? We traded below 164. You got that trade. You could have maneuvered it. At this point, downside follow-through has been tough this year. So if something changes, and it really changes in the next 2 days, we'll see the sellers protect probably this area. If we can get through tomorrow and the spiders don't engulf this range here, 1646 to 1658, you'll see that the sellers actually protected a level, and then maybe we can continue down to here. But there's lots of trading both ways. Don't have one direction, on your brain. Use a lot of different tactics. Lastly, you look at even, for Tesla, Tesla, you could talk about how it was a great long right here, which it was. And then here was your outside day, 110.75, gave you a move lower, then gave you a nice add-on trade when it broke this upper area, upper support. We talk about high-level stops, especially after a huge move like we've seen. And then today, came a little bit off the lows. They tried to protect where it broke out originally, but nice long, tactically, bull flag, continuation above prior highs into another red dog reversal, good short. Maybe you take it if you're risk averse, or you stay with it like maybe Laz did, and then you add on here for another trade. So lots of tactics you need to learn in order to trade these fast stocks and not just have opinions. Anyway, got to jump. Scott Redler, T3 Live. See you at the morning call. Have a good night.